Well, Ruby Amafu is telling us clearly that an investment in a life insurance product is a testimony that you love yourself. But not only yourself, you're following scriptures by making sure that you show love to your family and to your household. So, that first half of the program, a lot of information. So, I say to individuals, if you want clarity, if you want to understand more, that you reach out to us, Personal Financial Solutions, 562-2655 or 727-4725. So we could have a sit down and we can review your existing life insurance with you if you have, or if you're looking to invest, we can provide you with the type of guidance you may need when it comes to the life insurance product. But let's look at some life insurance products now, the actual products. Well, the very first one that started when life insurance started moons and moons ago is an insurance policy called term life. And as the name suggests, this is an insurance for a particular number of years. You could have a term life insurance for 10 years, 20 years, up to age 65, up to age 80. But the very important aspect of the term life is that you have to know that it provides zero cash value. And because it provides zero cash value, it is the cheapest form of insurance. So if you're young, you can get $1 million of term life insurance very, very cheap, inexpensively. You can get that. Some persons, like I was on a program sometime, a Zoom program where the individual was promoting using term life for a short number of years, maybe 10 years, and then you go back again, and then you buy, and then you go back again. Now, I must caution individuals in the use of term life insurance that way, because insurance product is not an automatic purchase. Insurance product is based primarily on your health. If you remember, I said earlier, when you're young, you're in good health, vitality, and so forth. Because insurance is a business, and if the person is not in good health, the insurance company will turn down the person. They wouldn't provide them with life insurance. I always say to persons that if life insurance companies were just looking for persons, they'll go up to Mount St. John and say, we're here. Anybody ready for us? And persons who can't walk, persons who are sick will jump off the bed because they will realize the importance of a life insurance product then. But insurance products are when you're healthy, you get. If you're not healthy, it's going to be difficult for you to get the life insurance product. So that's the part of the difficulty with the term. If you're doing short term and you want to make sure the term run out and then you start again, then that might be some difficulty. If the product ends and you need to start again, you have to go through the whole process of getting insurance again. But I believe one of the major weaknesses of the term insurance is that it has no cash value. But one of these major strengths of the term insurance, it is that it is very inexpensive. Cheap, dirt cheap insurance. So that's one type. There's another type of insurance that persons might have heard a lot around, is the whole life insurance. So the term insurance is what we call a temporary insurance for a particular period of time. But the whole life insurance is an insurance that runs for your entire life until your age 100. And this type of insurance, we say it's a permanent insurance. It provides lifelong coverage, and usually for the whole life insurance, you have to pay that premium. You pay your premium, you pay the payments over the whole life of the policy. However, there are some whole life insurance that allow you to pay maybe up to age 65, and you can pay up the insurance, meaning the insurance is paid up at age 65 while the coverage, your savings continue to grow, your death benefit is there. It's called a whole life paid up to age 65. So that's that option there. The payment can last for the entire duration up to age 100, or it can last up to maybe age 65. It's paid up. You don't pay any more money. You just enjoy the fruits of your payment or of your labor. You continue to benefit just as if you were paying, but you're not paying. So that is the whole life insurance. Now, the whole life insurance provides cash value, unlike the term insurance that we say is naked, nada. You pay, and the only benefit that is there is if you die. And this is where a person is saying they're not paying nothing for when I die, somebody get the money. But if you're following 1 Timothy 5:8, and it says that you have to look about your household, and it says that you have to be concerned about your own, well, you should be saying that. However, the whole life insurance provides you, the individual. So if you're saying you don't care about nobody, you're not paying for if you die, somebody get money. But what about if you live? What about you? What about yourself? Well, think about yourself. So if you live, then you have money in that whole life insurance down the road. And I want to say to individuals, because persons would have indicated to me over the years, Stuart, I can take the same money from the insurance that you're saying to pay and put it at the bank and do my own thing. And I say, no problem. If you think, we look at the figures, we look at what have you, and they say yes. And I always do a test, I have the information and I know them because after a while they're my friends. And I will say, John, I want to see you. John will come and see me. And I'll say, John, remember when we look at the insurance 20 years ago, you indicated to me that this is what you could do. And I said, John, this here is the proposal, and this is what you would have had in your account if you had taken out the insurance policy, right? As your cash value and so forth, you will be protecting your family, right? Income protection of your family, right? And you would have saved something for yourself. And we are good. I said, John, how things with this $200 that you were supposed to pay? Were you able to do something in the bank? And by and large, John would always say to me, Short boy, so many things came in the way. I don't even save anything. Nothing. So it's just a figment of person's imagination that they can do certain things, because most of the time they don't have the discipline to do what they say they're going to do. And life insurance, whole life insurance, provides that discipline, because you're paying, especially if you're paying to protect your family, and that should be priority number one. Inadvertently, you're protecting yourself when it comes down the road, so far as saving money for you, so far as the cash value is concerned. Another type of insurance, beautiful insurance, is an insurance called an endowment insurance. So this insurance is going to pay that lump sum. Remember I talk about retirement, education, and so forth. This insurance called the endowment is that period of time that you may say, I want to save for 25 years. I want to save to up to age 65. And usually, whatever the death benefit is. So if you take out an insurance for 500,000, 300,000, 100,000, then the endowment paid to you at after 20 years, age 65, whenever the period ends, will be that death benefit. So your family could get that money while if you die, or you get that lump sum paid to you at the end of the endowment period. I am saying to persons out there, don't tell me that you cannot, or you will not, or you are saying that you would want to put money in an endowment policy. And let me say, insurance has become so innovative, because we're in the age of AI now, that you can have a mixture of some of these here, where you don't have to have the endowment by itself. You could have a policy that when you get the endowment money, the lump sum in your hand, your insurance still continues for you along the way. So you could have a combination of insurance policies. Enhance. So, the endowment policy, a wonderful and beautiful policy to save money. A wonderful and beautiful policy to save money for education. A wonderful and beautiful policy to save money for retirement. A wonderful and beautiful policy to have money for a rainy day, because in that endowment you will have money being saved for you as the years pass on. So, life insurance is a wonderful product. It's a product that no family should be without. I say it's a product that every individual, bar none, should have, especially every working individual should invest in a life insurance product. Should invest in a life insurance product. Again, if you want to have a personal consultation, a personal sit down to understand more, visit us, please. Visit us at Personal Financial Solutions. You have another insurance. We don't use it a lot in our parts here, called Universal Life Insurance. And this here is an insurance where the premium payments can be adjusted and so forth. It has some conditions with it. It's also based on prevailing interest rates and so forth. So it's a little different, called Universal Life Insurance. There's another type of insurance. Well, this might not be considered insurance. It's called critical illness insurance. But because it doesn't pay out on the death of an individual, it pays if you develop a critical illness. So cancer, stroke, Alzheimer's, and so forth. You will get that money, that lump sum that you say you want to assist with that critical illness. It's not a medical insurance, right? It is more attuned to life. But let me say, it's in between medical and life, in that it provides a payout, a cash payout to you if you develop a critical illness. So these are some of the insurance products that you can invest in, and I'll give you another one. If you watch television a lot, and especially those cable networks, they used to speak about it and advertise it a lot. They say it's guaranteed life. And you might be saying, what is guaranteed life? They say, look, no matter the illness you have, no matter, you can get insurance. Well, this type of insurance is a particular type of insurance where it provides you with insurance, no matter your health conditions. But of course, there are certain conditionalities, certain limitations, and so forth when it comes to that insurance. There's certain so maybe if you want to get an insurance for your home to construct your home, and you have certain type of illnesses, because remember I said that you have to be in good health. You have a certain type of illnesses that may prevent you from getting insurance of, let's say, 350,000, 400,000, but you still want certain insurance, then you can get the guaranteed life. It's usually a smaller or limited in the amount, and it usually have some conditionalities because you're coming on the insurance as a client with certain illnesses. So the insurance will have to protect itself. And usually what the guaranteed life, and this one is the one is usually most for final expenses if the person has health conditions. Usually one of the main conditionalities is that for the first 24 months, if you're if you die, then they just return the premium that you pay to the beneficiary. So those 24 months will take care of the usual medical requirements that the insurance will call for, right? So guaranteed life is another type of insurance. So all of the benefits that I mentioned can be covered by these type of insurance policies. Remember the benefits we mentioned again. So just for you, so let me just go through the benefits. We're talking about protection, family protection or income protection, mortgage protection, education funding, rainy day emergency funding, retirement savings, final expenses. And we're saying that these here can be covered, or you can get insurance to deal with these benefits: a term plan, a whole life insurance, endowment, universal life, or you can get an insurance that we call guaranteed life. Well, another insurance to deal with retirement that I didn't mention is a straight out annuity, where you put money into a fund and then you get back certain payments from the fund. Now, there is no death benefit in that, but you have saved your fund as your benefit to your beneficiary. So if you have in your fund $150,000 and you die, then the beneficiary will get that $150,000. So that again is another type of quote unquote insurance product that can provide you with an opportunity to save money for retirement or just to build cash reserve or build investment. Now we're getting down to the end of the program, and most persons tell me, Stuart, when we tune in, we just listen and we just soak in what you're saying and we get educated. So I understand how the program is going now. Some persons may call now and again, but I understand that we have our listeners out there well tuned in. So let me just look at some of the key terms. Just a few key terms that are important for persons to be aware of when it comes to life insurance, right? So we'll do that for the last 3 minutes, and then we will call our program this evening a wrap. Well, one of the terms, policy holder. Who is the policy holder? Well, you will be the policy holder because the insurance company will actually give you a policy that has to be stamped and sealed by the Inland Revenue Department to make sure that it's a contract, a binding contract between you and the insurance company. The insured, who is the insured? Well, the insured will be you, the person, the life, you'll have to see who the insured person is. That person will be the name on the policy or the application that if they pass on, the death benefit will be paid. So the person whose life is covered by the insurance policy is the insured. So the death of the insured will trigger payment of the death benefit. The policy holder and the insured can be the same person or they can be a different person. So if you take out a policy and put your a child on as the insured, then you are the policy holder, but the child will be the insured person. What about beneficiary? This is a big term, right? The beneficiary is the person that you put on the policy that will be entitled to receive the death benefit in the event of death. Now, the beneficiary could be the financial institution if you assign the policy to the financial institution to secure a mortgage loan or any type of loan. So just be mindful of that. What about the premium? The payments you make monthly or quarterly or annually on the policy, that those payments are called premium. Well, we spoke about the death benefit and the face amount, so I won't get into that. We spoke about the cash value, right? That's the amount, the savings component that builds up on permanent life insurance policies, whole life policies, and also on endowment policies, not on term life, right? The policy term, basically the specific period for which a term life insurance policy provides coverage, right? And that term could be for an endowment too, right? So an endowment policy could be a term policy, but that endowment policy is called an endowment. So the term policy has a specific term, and it has no cash value. We spoke about permanent insurance, and we spoke about life temporary insurance, right? Now, I just want to add two more terms, and we close. Lapse, you'll hear this term lapse, is when you don't pay your policy premium for a period of time, and the policy is lapsed. The policy is still good because you usually have a condition or clause which says if you come and you can rectify it within a year or within 3 years, and you will not lose the money that you would have paid on that policy. The surrender value is the amount of money you have on the policy at the time if you want to surrender the policy. You have cash, you get your money. And the last term that I will mention here is the grace period. Insurance policies are magical. And I'll end by telling you, if your insurance policy is due on the 28th of a month, you're paying monthly, you automatically get a 30-day grace period. So grace period, a period under the premium, after the premium due date becomes, let me go over that, a period after the premium is due, during which the policy remain in force. So it's due the 28th, so the 28th of April passed, you haven't paid, well, it's still in force until the 28th of May. Anything happens, the insurance company must honor that policy, called the grace period, 1 month grace period to pay. I usually tell clients, don't, use the grace period like right to the month. You try to make your payments as soon as possible. So this evening was an evening where we look at a product we call an intangible product, the life insurance product. And I am saying that every person in Antigua and Barbuda should have a life insurance product. If you need more information as to the particulars, the details, the workings of a life insurance product, please, I beg you, reach out to us at Personal Financial Solutions, 727-472-562-2625. You can, send us a message via Facebook or anyhow you want to reach out to us, because a life insurance product will fulfill 1 Timothy. I need to end the program by reading 1 Timothy chapter 5 verse 8 again. It says, but if anyone has no concern for his own, and especially for those of his own household, he has denied the faith, and he is worse than an unbeliever. So our Holy Father, our God Almighty, is telling us to take care of our people, take care of our household. And I say to you, a critical product that you can use to take care of your household is a life insurance product. Remember that we at Personal Financial Solutions and Anthony Stewart want all of us to live happy, healthy, and wealthy lives. A life insurance product can assist you in living such a life. Reach out to us, get the information as we close our 14th edition of Money and Your Life. Again, a shout out to my two Rasta twin brethren from Param. I want to tell you all, Anthony Stewart loves you all, and keep your head high because you have come a long way in your journey. Keep going on, my brothers. God bless until we come again in our 15th installment next week, Wednesday. Everybody know